Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Looks like we will get a record for the Dow as we go out here. We got that, plus more earnings coming your way on the second hour of the closing bell with Kelly Evans and Company. See you tomorrow, Kel.
Thank you, Bill, and welcome to the closing bell, everybody. I'm Kelly Evans. Looking at the Dow on the bell, it looks like it might have turned green here. Of course, that would be good for a record close for the blue chips. The best performer today, even though everybody was basically down, looks like about a 2-point gain, 23,550. We'll see exactly how it shakes out, but that would be a record high close for the Dow 30. The S&P 500 down just 1.5 on the bell to 2589. The NASDAQ Composite down 0.25%, closing at a 6767.78. Elegant number there. And the Russell 2000s having a bad session today, shedding 1.25%. They're down to 1479. Their all-time record high close is still from early October when they closed at 1512. A lot of earnings in those numbers and a lot more earnings headed our way this hour. Our reporters are standing by. Julia Borson will bring us snap results when they cross. Diana Olick is covering Zillow, and Seema Modi is monitoring Match Group's numbers along with Marriott. Guys, thank you. We'll see you in just a couple of minutes. Joining me today, CNBC senior markets commentator Michael Santoli. David Katz is here on set. Welcome from Matrix Asset Advisors, and John Blank from Zacks Investment Research. Now, the biggest Dow winner today was Dow DuPont. The biggest loser was JP Morgan Chase. Over in the S&P, the biggest loser today, Priceline, as TripAdvisor and some mounting pressure across online bookings tank those things. TripAdvisor down 23%, Priceline, Michael, down 13.5%.
Yeah, I mean, a huge air pocket in that one sector. It seems to me a general defensive tone, though, was the theme today. You mentioned J.P. Morgan as a big Dow loser. The banks in general down more than 1.5% as a group, finally kind of surrendering to that pressure down on the yield curve. I think, and just the fact that the staples and utilities were the only things on the upside just shows you just generally the undertow of selling that's been there, and the average stock took hold of the indexes. But I have to say, not a lot of damage done outside the small caps, which are down more than 1%.
Yeah, remarkable. The Dow managed. I think it looks like it's up now 7 points on the bell. David, what do you make of it all?
In terms of the market, we're expecting a lot of volatility this quarter. We would not read too much into any daily activity. The financials have had a great run. They gave back a little bit today. We actually like them, as we've discussed a few times this year. So if there's any more weakness, we'd be adding it to that.
Why are you expecting volatility? Because that's been a losing bet for a while now.
Well, we're not betting on volatility. As an investor, we're saying expect volatility. And the reason we're expecting it is because you have not had it for a while, and volatility is normal. So the fact that we haven't had it simply means that you're going to return to the norm, regress to the mean, and we expect that volatility. If you're an investor, don't chase the fact that the market's done great. Expect volatility, buy into any sort of weakness.
John, what are your thoughts?
Kelly, what I would say is I think the vote next week on Thursday is going to be for the tax bill, but people are looking in front of that to book profit. So I think some of the selling today was profit taking. That's what I think.
And if that's the case, it wasn't much. I mean, the Dow closed higher. As I mentioned, we had a couple of issues in the travel space, issues related to earnings. John, would you be a buyer there?
You know, I think TripAdvisor is starting to look pretty interesting at $30 a share, Kelly. That's back to a 2012 low, and that was pretty stable low. So I think going forward, I think TripAdvisor might be the opportunity. Priceline, I think that was a more shocking outlook-related takedown for the fourth quarter. I would probably stay away from that one.
All right, let's dig into these tax jitters for a moment. Those jitters hitting the market today a little bit, maybe in the small cap Russell Index, often seen as a proxy for tax reform, closed down more than 1%. The Senate GOP tax bill will be released Thursday, according to NBC News. Meanwhile, Reuters reporting that investors are jumping on buyback stocks like Microsoft, Texas Instruments, Southwest, Lowe's, all in a bet on the Trump tax plan, Michael.
Yeah, I don't know if that's necessarily a real acute trade on the tax plan in terms of those types of stocks. Those are kind of good free cash flow stocks that have been really good performers for a while now as a general category. I do think, though, people are much more focused on the complications and the challenges to getting this tax reform done and getting to a 20% corporate rate than they are on the opportunities right now. So I do think that's been an excuse for some of the jitters.
David, what do you think was going on with the small caps today, and what are your prospects for the tax reform plan?
Probably tax related, because people are realizing that it's going to be difficult, but we wouldn't do anything in terms of investing for or against stocks on the tax plan. There's going to be tremendous changes between now and when it's finally implemented, so we wouldn't make any wholesale changes to your portfolio. If you've liked small caps, we'd be buying here. and we wouldn't try to position for or against any of these companies.
If it doesn't pass, you think the market sells off?
Over the very near term, you might have a sell-off if it doesn't pass, but we think that stock valuations are okay, interest rates are low, and the economy is good, regardless of whether the tax plan passes or not. And if it does pass, it's icing on the cake. You can get a nice 10% earnings pickup.
Okay, we have some breaking news on Twitter to get to. Julia, what's happening there?
Kelly, Twitter announcing it's rolling out the ability to tweet with 280 characters to most countries starting today. This is expanding from a test it launched back in September to see the impact of the doubling of its traditional 140-character limit, a limit that has defined the service for a decade. Twitter saying in a blog, we saw when people needed to use more than 140 characters, they tweeted more easily and more often. But importantly, people tweeted below 140 more of the time, and the brevity of Twitter remained. This, of course, comes as Twitter works to grow its user base and engagement in the face of a lot of different kinds of competition. Kelly, back over to you.
Thank you, Julia. Michael, they said 9% of their tweets were running up against this threshold, so they needed to unlock this. Do you like it?
I don't know if wholesale I like it. I don't know if it's necessarily a formula for getting higher user engagement, which therefore is going to translate into more advertiser interest. Maybe it will. I do think there's some kind of cumbersome workarounds that people have to do, you know, threading tweets and basically having all these ones that fall through the cracks. So maybe it's a little bit of a streamline. Well, yes.
Twitter.
I mean, there definitely was something of the benefits of that constraint. But, you know, as I say, I don't think everyone's going to run off to 280 for every single tweet.
Zillow is out with its earnings. Let's get over to that report now. Diana Olick has the numbers. Diana?
Kelly, a strong beat for Zillow. Q3 earnings per share came in at 19 cents adjusted versus estimates of 17 cents per share. Revenue beat again, $282 million versus estimates of $277 million, and strong Q4 revenue guidance at $274 million to $279 million versus estimates of $274.5 million. Now, traffic to Zillow's brands and apps and websites reached more than 175 million average monthly unique users in the third quarter, at an increase of 6% year over year. We had been looking at traffic, so that's a gain of 6% year over year. Traffic to mobile apps and websites, Zillow, Trulia, StreetEasy, Realestate.com increased 19% year over year to $1.7 billion. And CEO Spencer Rascoff touted some new products, saying that he is looking towards things such as 3D home tours on iPhones and the test of Zillow's instant offers that allow home sellers to compare agent estimates of their home sale prices. All new products that Zillow is offering. Also, he notes in the third quarter of 2017, Premier Agent revenue grew 24% year over year. So solid beat for Zillow.
Indeed, and the shares are up now 7%. Julia, thank you. John, what do you think about Zillow?
You know, this is a great report. This tells us something that we didn't know before, that real estate is actually going to survive the interest rate hikes the Fed is putting on the table and the balance sheet reductions. So this tells us that not only is the market stronger, but we should probably look at real estate as a growth sector for the S&P 500.
I can say, Michael, I was a couple of those clicks. Okay.
So what you're saying is that maybe they saw peak traffic after you no longer need to look anymore? Well, look, I think there's some headroom for the stock because it was trading at 50 as recently as a few months ago. So I do think good beat, especially with upside to revenue forward guidance, is probably the thing that's going to lift it a little bit here.
We'll have more.
Expensive stock, though, has been since day one.
And now it's up 10% after hours. We'll have more on some of those home ownership trends. But any minute now, we are going to get results from Snap, the third quarter numbers. Wall Street expecting a loss of 33 cents per share, revenue of almost $237 million. Company's got a lot to prove. First 2 quarters since going public have not gone very well. John, the shares up nearly 2% in the session today, though.
Yeah, that's just short covering, Kelly. You got to remember this is the most shorted stock in the internet application, social media space. So short covering is not a good sign. It doesn't tell us anything. And also, I would say $15 a share is really $2 a share below the IPO price. And the bears and the bulls in this stock are around that $17 a share level. $20 and $30 a share price targets are bulls, and 12 and 14 are bears. So bottom line is we're at $15 a share. That's a bearish number.
It certainly is if you owned it from the IPO, but it has been fighting its way back from 12 and change the last 3 or 4 months. I do think you have people starting to try and fashion a reason to look at it in a different light, which is, one, it was not an instrument of hacking the election. And two, I think some of the new hardware, some of the new phones, it's a play on the iPhone 10 and the ways of basically utilizing better photography and AR and all that. So I do think that there's something to be said for the fact that the stock's managed to claw its way up here.
David, we've seen a lot of companies, the big platforms doing very well this earnings season, the smaller online platforms really struggling. Snap is one of the smaller ones, but it is valuable. What are your thoughts?
Well, they've disappointed twice, and typically when a company disappoints a number of times, you don't want to bet that they're going to change their ways. So they are under pressure to do better. This is one that we're happy that we don't own, whether it does well or poorly in this. We think there are much better places in the market to make money.
Yeah, and there's been a lot of deals lately, perhaps bulking up against some of these FANG companies. The deal mania continues today. New report says Brookfield Asset Management has held discussions with mall owner GGP about acquiring a remaining stake and taking the company private. That shot GGP shares higher today, made it the best performer in the S&P 500. John, what does this possible deal say to you?
It says that we've got some issues in these shopping malls, and people still aren't comfortable with retail. If General Growth's getting out of these businesses or looking to sell, it tells us that we really do have an Amazon effect, and this is something we need to be aware of.
Mike?
Scale in sectors that have, very well-known challenges. I mean, I do think that's part of the story, both for media and for real estate, right? For retail real estate.
These are well-regarded operators,
Absolutely.
Brookfield and GGP, and there's been an argument all along that reinvesting in some of the existing property, not only with retail refresh, but also with the restaurants and different experiences, would be plenty to stave off the Amazon effect.
They would be kind of the destination community retail places that are thought to be the survivors. Yeah, I agree with you, Cal. I mean, essentially, all these estimates of how many hundreds or maybe, even thousands of shopping centers have to close are not really these types of properties that these two companies tend to own. It doesn't mean it's going to be easy,
but
because
if
there is pressure on rent and vacancy.
They might just think the public price is too low for the value. That's it.
Very smart management that know what they think their assets are worth.
Yes, absolutely. Let's send it to Seema Modi. She joins us now for a quick market flash. Seema?
And Kelly, check out shares of Lending Club dropping precipitously on earnings that came in line with expectations. Revenue, though, a miss at $154 million. Expectations were for $157.2 million, but the real story is in guidance. Weak Q4 revenue guidance. You can see the stock here down 17%, a company that went public in August of 2014. Kelly?
Wow. Thank you, Seema. This is now less than a $5 stock. David, what are your thoughts?
Well, back to what you were talking about takeovers. We think that after a dearth of takeovers for the first 9 months of the year, you're going to see a pretty significant pickup. You had Disney and Fox talking yesterday. You had Broadcom approach Qualcomm. We think that's one thing that you can look at over the next year is try to buy companies that you think could be bought out that are good anyway. John,
maybe there needs to be some consolidation in the online lending space.
Yeah, $5 a share. Kelly, I don't understand businesses like this. I mean, is there a more crowded space than mainline banking and in the entire spectrum of the economy? So I don't understand the value proposition to begin with. I just think it's a business that was trying to find a way in a space that makes no sense to find a way. So I'm not surprised they're 5. I bet it goes to 0 before it goes to 10.
17 cents versus $1.30 estimates. We talked to Imran Khan, who's Chief Strategy Officer. I asked him why the shortfall. He says it's due to a change in how Snap sells ads, saying, quote, "We've taken important steps this year to build a scalable advertising business. Transitioning to an auction has lowered prices by 60% year over year, leading to a revenue headwind in the short term, but it is critically important for us to continue to drive advertiser adoption. The number of advertisers on our auction platform is now already 5 times higher than the beginning of Q3. Now, Snap, for the first time, released its prepared remarks along with those earnings. It hasn't done that before. Evan Spiegel saying in prepared remarks that their priorities now are user growth, content, and augmented reality. Spiegel says they're working to redesign the app to make it easier to use, says that could be disruptive to the business in the short term, but they'll take the risk for what they think is long-term benefits. He also explains that lower daily active user growth than expected. He said this can be partially attributed to our decision to report our daily active users as an average over the entire quarter, where a strong September was offset by more modest growth in July and August. He says they do want to drive more user growth in 2018. He also said Snapchat has 3.5 billion snaps created daily. That's up more than 40%, and that the community opens the app an average of 25 times per day. One last note here, Kelly. He said that in Q3 they recorded $39.9 million of charges related to spectacles inventory, excess inventory reserves. Back over to you.
Julia, as you've delivered that report, the shares have gone from a drop of 11% to a drop of about 21%. Julia Borson with that report. Joining us to react to those earnings, Ed Lee from Recode and Jonathan Keys from Summit Redstone Partners. Ed, wow, what do you think?
Wow, this is a big miss. I mean, even if you take the words about that the advertising missing or the revenue missing because they have a new automated system and getting people up to speed on it, they missed big on the active user base. Now, they also try to explain that by saying, you know, it's how we count them are slightly different. It seems like they keep moving the goalposts a little bit every quarter in terms of how they measure things, what they want us to focus on. Snap hasn't been great at communicating with Wall Street. This is another example of that, which is why, you know, it's just an uncertain thing. It's dropping more than 20%. Beyond just the miss, it's the communication with investors.
Yeah, Jonathan, you've had a sell rating on this stock. So how many of these concerns to you are kind of quarterly or transitional related to that auction model and other things? And how much of this is existential?
I think it's both. There's some that's quarterly, and hopefully for management's sake, it's going to be short term, but I think there's a lot that's going to be more existential, more long term. Stuff with pricing, what's that telling me is that basically in order to drive demand, in order to fill up inventory, they had to lower pricing. And you know, how long will that take? How long will they be able to fill up the inventory and then be able to raise prices? Facebook at the same time had raised prices, and in their Q3 quarter, they said the pricing was received well. The price hike was received well. This is obviously in their words, but they did not report any downtick in users or obviously in revenues or in ARPU like Snap is doing here.
Yeah, Ed, obviously what did not get mentioned in the official statements from the Snap folks was Instagram. But to that point about Facebook pricing power when Snap seems not to have it, the bull case, at least one of them, was average revenue per user. There's such a huge gap between what Snap's been able to achieve and what Facebook gets that, you know, they could make up a lot of ground as if that there was some natural tendency for them to go up. Well, this is a big slip on that trajectory in this quarter. So is it kind of game over, or what do they have to do to figure that out?
Well, I think you pointed out all the exact right things. I don't think it's game over, though. I think they have room to grow. I think, again, it comes down to bringing in more advertisers to kind of get the prices up in terms of more active bidding, getting them, you know, understanding their system. I mean, my sort of skepticism around that a little bit, though, is, you know, these are systems that Google and Facebook have had for years. So it's not as if they're advertisers who don't know how these things work, how auction systems work, APIs and whatnot. So, you know, it's just a matter of getting out to the market and getting more advertisers on board, not necessarily the big ones, but the mom and pop ones, the long tail advertisers that really fuel Facebook and Google. That's one area Snap really hasn't benefited from. If anything, they're doing better on the higher end advertisers, which is what Facebook and Google have always wanted to try to get as well. So it's a mismatch, you know, and I think one side of the ad market is something they haven't really tapped into properly.
Snap shares are down about 19% after hours after this disappointing report, a little bit over $12 a share right now. Jonathan, is the total number of users on the internet on companies like this growing, or are Facebook, you know, are their Instagram and WhatsApp platforms taking users away from Snap?
It's they're taking users definitely from Snap. I mean, you know, there's only so many hours in a day. There's only so much free time, and you have to choose between one platform versus the other. You go obviously to the one where you have the most friends, but friends are, a lot of people, especially the teenagers, the millennials, have both, and they're starting to pick sides in terms of which one they spend more time on. So I would add to the comment earlier in terms of getting advertisers on there. There's also something that I've talked about before is there's also the hesitation, the conservative thinking of advertisers. You know, they have limited advertising budget. They don't want to experiment with something that's a new platform. They want to try something that's a tested platform. And I think,
Jonathan,
go ahead.
To that point, because it is a good point, and Ed made the point as well, that this is maybe where some of the higher-end advertisers are going. Can Snap exist as a niche platform that attracts these, you know, advertisers looking for a different demographic, or not?
Absolutely. Actually, that's my thesis, is that they're on the road to becoming a niche platform, a niche market with not the scale, not the size that everyone thought they would be. They're not going to take over the world. They're going to basically target teenagers, maybe the 20-somethings, but after that, a lot of them tend to migrate to Instagram, to Twitter, to Facebook. There's not a lot of loyalty with the users, and the advertisers who would find Snapchat appealing would be those who are related to content, probably like movie advertisers, entertainment advertisers, stuff that they have related to what Snap is partnered with right now.
All right. Well, a difficult reaction in the share price for Snap. I mean, first couple of quarters out of the gate, Mike, this is now the third one. A big disappointing move. Ed, what were you going to say? Last word?
I mean, just the point is that like it's a media company, right? That's what they really need to focus on, making sure that works. They're not a hardware company. They're not a camera company. They should stop pretending that that there's some kind of a newfangled tech thing. They're social media, and that's where they're getting their business from, and they need to take full stock of that.